All right, let's answer some of your questions now. First up, Pete, we have a video question, a homegrown one for you.
Hey, Pete, it's Big Hike from Minneapolis. We haven't seen you at the gym lately. Just wondering if you forgot how to get here or if you just quit lifting. My question is this. I want to invest a significant amount of money in one of our fine Minnesota companies. We've got a lot to choose from. We've got United Health, which is my first pick, and we've got 3M, Target, Medtronic, and others. What are your thoughts and why? Take care.
Okay, Pete, what do you think of the choices? If you had to pick one, I know knowing you'd say, well, I like them all, but what if you had to pick
Scott,
one?
I like them all. If I have to pick one right now, it might be Medtronic, to be honest with you. And Big Ike is right. I need to get in the gym a little bit more frequently. But, yeah, you look at Medtronic, medical devices, I think that's really well run. They've got great free cash flow, and they've got an unbelievable balance sheet. So because of the fact that I can't choose Target, probably can't go with Toro, I'm going to give you Medtronic. Okay.
All right. Good stuff. Thank you for that. Next up, Mr. Wonderful, a video question for you.
Hi, this is Scott from Cincinnati, Ohio. Is 23andMe a good long-term buy, especially given its extensive human genome database and the wealth of future drug development? Thanks.
Been a rough go, KO. Down 30%
Yes.
since June 17th debut.
Yes, this actually came through as a SPAC. It was a de-SPACing event, 23andMe. The challenge for the company and what investors have been focusing on is the customer acquisition cost. It's done digitally. You have to find that customer, get them to send the kit to them. They buy the kit, then they have to bring it back. And it's been challenging. But if you're going to get into the name now, you're buying into the idea that it's not really a pharma company at all. It's a data company. And the more they aggregate the human genome data for all these sample sets for people that are developing drugs and other things, this is very, very valuable. Now, they're not the only company doing that, and certainly the Chinese have put a government focus on doing that. There's many different people pursuing their strategy, but they're probably the best known name. Really strong woman CEO there that has been with the company through all of this customer acquisition. So you got to go long term here. If you're going to dig into this name, this is not a trade. You want to own this for the next 3 years.
That's a rough go. Down another 6.5% today. All right, Shan. Christine in New Jersey, when are we going to see reopening travel stocks soar? Expedia, Airbnb, which is on the move today, TripAdvisor, all haven't popped yet, but the airports are packed.
Well, they actually have popped. If you go back to last year and you look up through sort of late March to mid-April for these stocks, and we've seen a little bit of a decline since then, and that's because these stocks need volume. So although you're feeling like the airports are packed, airlines haven't added back all the routes that were available prior to the pandemic, and there's still limitations. So until business travelers get back out there, until the consumer demand is higher, until we see more volumes, these are going to kind of trade sideways until we see that. Okay.
Jason Snipe, to you. Ben in Long Island wants to know about biotech versus the transport. Should I get rid of the IBB, which is the biotech ETF, and buy the IYT, the transports, instead? What do you think?
Yeah, look, I own them both. IBB's got a lot of activity in the biotech space, but I think there's a better setup, in the transports and the rails. I'm betting on the consumer here and the pricing power that the rails have. So I would move for IYT here.